Good weekend. I'm Epstein with your weekend edition of your Metal Market Wrap-Up, and this wrap-up is for Friday, the 26th of April, 2024. So we have an interesting week ahead of us. There's a couple of big events, three that I'm looking at. Monday, you're going to get the quarterly Treasury needs. You know, last time they came out with them, it shook the market. So be aware this could be a market-moving event when they tell you what they need and how they're going to go about it. Long-term, short-term, who knows what they're going to do. Then we start the two-day FOMC meeting on Tuesday, and we get the Fed statement and the press conference on Wednesday. So in that, I don't expect that Fed Chair Powell will alter in any manner. The PCE, the GDP, all the numbers that came out point to me of one thing: strong labor market, still price inflation at hand, and gradual easing in the GDP. It's wobbling now because of restrictive high interest rates. I'm making it as simple as I can to wrap that up. That's what I'm seeing in the market. Some people think that they'll play with the runoff of the balance sheet, and I question why. Everything right now is still at the point where it's just starting to bite, if it's biting at all. If you looked at the 3 months of the PCE that just came out, you see January was the big weighting. We expected that. We expected there would be price increases put in by a number of companies, just the way the pricing goes in this country at the beginning of the year, and it exactly happened that way. We slipped back in February in the pricing, but we went up a little bit in March. So that's not what you're looking for. You're looking for the staircase down, and you didn't get it. I think they just plain sit tight, and they go, the data doesn't say to do anything yet. Then on Friday, you're going to get the U.S. jobs report. Now, I keep looking at, and remember, we're going to get ADP, Challenger Gray along the way with that. I don't see how it can come out on the weak side. A lot of people are getting their jobs. You keep seeing the jobless claims don't grow. They just hang around the 205, 215,000 level, and they don't move up, they don't move down. You get a week up of or two of the continuing claims, then they go falling right back. So I think that they'll come out on a relatively stable, strong side. Okay, so where are we then in the metals? Well, if we take a look together, this is a monthly chart. You're up 5.29%. It's been a phenomenal month on a closing basis. These are closing chart prices. And you've really rallied from once you got over this 18-month moving average of close, you just kept the party going. When we go to a weekly close-only chart, the market has stayed over everything, and you lost back on a weekly basis 2.65%. So some profit-taking stepped in. When we come to the weekly chart here, you can see how the market has played around and it's getting some price distribution. But the overall pattern is, number one, on a stilt. I mean, that's a pretty big run up, but it's still higher lows and certainly higher highs. So the market is still looking friendly. That was the last swing line low. We don't know where this one will end up. Is the market going to extend that, or is it going to not take out this week's low and then it will move up to that level? When I put on the moving averages, all the longer-term averages, the 100 to 200, are under the market. And you could see you had one big test of them back here in October, and it's never looked back. The market has just continued up. Where's the resistance? Right where you'd expect it. You had this one run in the market, and from there, the market started going sideways, and that's what it's doing. It's in a drift. That's the way to call it. In a drift at this point, looking to see what next. And think of what it's gone through. To get here, it's looked at Israel and Iran attack each other. We're watching Rafah now unfold in front of us. We're watching Ukraine take a beating, and now they've got money and they're about to get more Patriot. I hope we give them more Patriot defense systems so that they can continue the battle. And while there's so many U.S. people against this, you have to understand, if a NATO country gets hit, we have to put forces there. What we're spending now looks like nothing if that happens. So the reason America is doing this, and reluctantly, I understand that, is because we're trying to avoid that and stop Putin where he's at. At the end of the day, I made my prediction. I do think Ukraine is going to be a split country to reach a peace. Just like Crimea was given up, I think part of that's going to happen too. I just think that's the sad reality, and you buy more time. I'm not in favor of it, but that's what I think will happen. You can see where the market comes here, just sitting, and it's still got the embedded reading. That embedded reading is the strongest technical signal I know of. That doesn't mean you don't have better ones, but I don't know of another one. So until the red line closes under 79, I say that the breaks in the market continue to be buys. I've got this chart, the gold silver, as silver, because when you're under the 18-day average, the bias is down and you need less ounces of silver, and that's what these numbers are, how many ounces you need to get 1 ounce of gold. When we look at the silver, it's like a mirror image in some ways of the gold market. Ran the Bollinger Band, came out of a big base area. And when you look back at the chart, we had talked about this. Is this basing? It turns out it did base. So until it would get through these numbers right through here, back at the 20 level, let's call it. Now, this market on pullbacks is still a buy for the long term. But unlike the gold, it's not embedded. So it's an overbought market. Overbought markets either embed or they correct down to the point where you lose the 70 readings. Right now, silver's not as strong as gold as a chart technician looking at the market. Copper's gotten, I think, ahead of itself. Now, I'm the big bull in copper, and I was telling you about that way back here, and I said, we're going to look back at copper. You won't have pennies, and I've said this over and over, and I still believe I'm right, all right? It's going to go away because copper is going to be a $5 commodity in years to come. And the reason is there's a shortage. The next move by central banks is cuts to spur on economies. When you spur on economies, what do you get going? Industry. What does industry use? In many items, not all, there's clothing, there's plenty of items, but anything with an engine, anything with electricity, there's copper usage. And that could be anything. It's not just appliances. It could be anything. What about all this infrastructure you need for these AI centers? Think of all the miles of copper and how thick it has to be to handle this electric needs. And where's it going to get that from? All this comes into play. It's not going away. What about electric cars? I can go on and on with you. All right. And you're embedded. Until you lose the embedded reading, breaks are opportunities, but not over Bollinger Bands, in my opinion. I said platinum was the weak sister of everything. It is. It's still in an overall uptrend, but I did not think, and you were with me as we were talking, the videos are out there on the YouTube. I was looking at the market, and as it got through here, I said, I don't think it's got the power to get through the 200-day and the upper band. And boy, was that right. Now, I think it's going to fight to get back over the 18-day average and try to gradually reestablish, but it's not the play. The gold is the strongest of the metals for the precious metal part of it, obviously, and copper is the strongest industrial metal. In the dollar index, you've got a dollar index that needs one more week to re-embed. And if it does so, higher prices are coming. Now, tonight we put out at the Linn Group our price count chart. And do you remember I said, I think we're going to get up near that 107, 108 area. So we're 105.80. I don't think we're going to be far away from that. And 110 after that could be the next count. What does that do for the euro? Puts it down. Look at the yen. You're at a 34-year low versus the US dollar. 34-year low. So I talk all this and walk you through so much in the mornings. Now, we changed the time of my morning subscriber videos. I asked my clientele, as the client base has grown, we got people all over the world. And I go, what would be a better time? I'm used to recording at 5 in the morning. Would you like me to do it an hour later? I had a large percentage of people. I did a poll. They answered over 10 to 1. Move it to 6 for the people. So for a lot of you out east, in Europe and so on, now it comes out Chicago time, 6 a.m. And even the California people loved it. They said, For us, it's an hour better in terms of our timing. I've tried working in California for what we do as traders. I don't know how people do it there. It's you have no life. You never go to sleep. And I don't sleep a lot to begin with. The futures categories, I cover all these. 40 charts with trade ideas, special reports. I write in my reports, if you get my written updates as well, I really cover a lot of ground. And I don't do it in a way where you got to say to yourself, I need 10 minutes to read these reports. I time them. They're minutes. Not 5 minutes. Could be a minute, could be 2, could be 3 to go through it, understand what I'm doing. I make points in them. I write in a way that you understand, I hope. And people seem to like what it does. Then I back this up when I do the combo, and this is the combo of the ETF. So you can either buy the morning futures, you can buy the ETF, or you can get what I refer to as the combo, which I think is the way to go. There are many times that the futures don't have the setup on something that I like, and I get that exact setup on the ETF. Less risk sometimes, better looking trade. We hold on to trades in the ETFs a lot longer, just the nature of the stock market. Number one, ETFs don't expire. Futures markets do. Number two, you don't have the leverage in ETFs that you do in futures. Futures is, for those of you that like leverage, is almost 90% leverage. It depends on the market. And you take a look at the ETF and you can't get beyond 50%. Don't get me wrong. There are ETFs that are 2 and 3 times and 4 times. I don't want to trade those. I trade the ones that are the way that I like them. But we look at long-term trades. We look at shorter term. Shorter term is not day trading. I am not a day trader. If you said anything, I'd be a swing trader. And if the trade bites in, I try to hold it. So IraEpstein.com, under the word research, you can move your cursor to the top here and it'll be there as well. You have a great weekend. I'll catch up with everybody Monday morning.